Okay, I think we'll start. I was going to start by saying that my name is Peter Cowie. I'm hosting this session. I've got three great people on board. This subject is the focus on the insurance sector. However, when I explained yesterday to a friend what I was doing today, I said I was hosting a session focused on the insurance industry in COVID, specializing in tech transformation and the role of first-party data and the restrictions of Google and Facebook. He wept with laughter that I was managing to do this. So luckily, we've got some real experts, and we together yesterday, and so I'm very confident of the team that we had lined up. We've got Paul Wishman, who's Vice President of CGI, been in insurance most of his life, esure, Swinton, LV. And I'll come back to, I'll get everyone to introduce themselves in a moment. We've got James Turnbull, who legend from British Gas in the AA and most recently at D&G. And then Jess Hodgson, who's Group Client Services Director of TIPi Group, who are responsible for this. And then behind the scenes, thank you to Jess Hollingbury and Charlotte Koski, who put all this together. So going back, so Paul, it was your birthday yesterday. Where are you? And just tell us a bit more about yourself and what's going on in your life at the moment.
Yeah, sure. So thanks, Peter. Yeah, 21 again yesterday. So yeah, sort of somewhat muted celebrations last night. Yeah, so as you mentioned, you know, firstly, a bit of potted history about myself. I have always been in the insurance business in one shape or form, both as a broker, underwriter. Actually, I had a .com business in '99, Insurecom, and then led through to the startup of esure Insurance, Group Digital Director for LV for 10 years, and most recently with the last 3.5 years with CGI. And yeah, I've got to say, generally speaking, you know, generally would say never been as busy. I think the recent crisis, you know, and the overused term, you know, unprecedented times that we're living through has seen a lot of adjustments, and I think people have found their feet, and I think people are pretty much getting on with things now, actually. So as far as where I am, I'm actually pretty much here most of the day in front of video conference calls, some webinars I'll be doing this week, and yeah, I mean, it's great to hear other people's experiences, what they're going through, some of the challenges that they're facing, and perhaps, and we'll talk about this later, some of the opportunities and the way things are perhaps shifting, and yeah, really what those opportunities, you know, are that potentially lay ahead. So difficult times, but paradoxically exciting times as well. Some very interesting things coming through. So be pleased to talk about it with the panel.
Super, thank you, Paul. Moving to James. So where are you, and where are you in your career with D&G, and what happened at Christmas when you made some bold decisions?
Thanks, Paul. So yeah, I'm James Turnbull, and as you mentioned, I've sort of worked for a number of quite large scale, quite iconic British brands for the last sort of 10, 15 years. Never made the conscious decision to move into insurance, and I guess I sort of specialise more in the discretionary insurance end of the market. So yeah, most recently just spent the last 4.5 years with Domestic & General. Fantastic brand. They've just exited their most recent private equity cycle. So at the end of that, I took the decision to move on and look at new opportunities. And so I've spent the last sort of few months in the world of COVID, helping and supporting a number of sort of smaller brands on a more sort of consultative basis. I also sit on a number of, I guess, digital advisory boards for charities. Probably the most high profile one is the WWF. The pandas, not the wrestlers. So helping those guys out, and about to re-enter the market in the next couple of months in terms of a full-time role. But I'll say more about that another time. Good.
So are you open to offers?
Always open to offers. Any good ones out there?
He's not saying that, but we all know what it's like in that situation. A rock star who has been through private equity and some real talent to be able to be snapped up. I'm just saying. Jess Hodgson, from TIPi Group. We know each other well. Lovely to see you.
Hello.
Where are you and what's going on in your life at the moment?
Not a huge amount in terms of moving around London, obviously. Been very busy. So hi everyone, I'm Jess, I'm the Group Client Services Director at TIPi Group. To head up client services across the 4 agencies within the group. It's been a very interesting period for us. Would very much agree with what Paul said about actually very exciting period in terms of how much information we're receiving. You know, information from Google Trends, media partners, and obviously conversations with various people in situations like this, and kind of thinking about the future. So I'm very excited to see what happens for our clients in the next 6 months, I guess.
Okay, super. Right, let's have a bit more of an in-depth with each of you. Going to Paul now. So, Paul, I mean, how serious are the effects of the ramifications of what we're going through for the insurance industry? And who do you think is going to be the winners and the losers as we come out of it?
So, yeah, challenging second part of that question for sure. So, I think at the moment we have gone through, perhaps as I said before, a little, obviously a period of adjustment. We've seen workforces being dispersed, working virtually. From an insurance parochial perspective, I suppose there were challenges, certainly in the first 2 or 3 weeks, I would say, because for that very fact that contact centres, underwriters, everyone was having to work virtually, perhaps not entirely used to doing that. The infrastructure required to make that happen was, had to go through a bit of adjustment. But I've got to say, I feel that actually the industry have responded to this excellently. I think, yes, in the first couple of weeks, I know that there were perhaps long sort of call wait times. You had a big surge of inquiries, people coming, who were concerned about their policies. Perhaps they wanted to suspend, cancel, query, terms and policy conditions. And there's a big surge there, coupled with the fact that you have just gone through this whole new way of working with your workforce. They're dispersed, they're having to get used to working virtually. And inevitably, no one could have necessarily planned for that comprehensively. And so perhaps there were some issues that were there. But if you actually look back at it in retrospect, you say, actually, it was actually done very, very successfully, very well. I think the industry responded in a great way. We've seen not only the ability to manage the customer services and accommodate all the new sort of inquiries that have come through, but even adjustments in the way policies are written. With a customer service sort of lens, I'd say it's great to see some of the some notable brands have actually looked to either defer payments or refund payments. So, I'm thinking perhaps of car insurers who have sort of recognised that the risk exposure is less because people aren't driving simply, and therefore they've actually credited back to their customers, refunds to take that into account. So 2 of my clients, for example, Admiral Insurance and LV, I know are perhaps quite notable to do that. We've seen that in different regions. CGI as a global company operates across predominantly EMEA and North America, and again we have seen insurers react in that way. What comes next and who the winners and losers will be is where we're going. Well, at CGI, we've got a philosophy of helping our clients by being able to respond first of all, and that's the period we're going through, to then rebound, to actually get back to shape, and if you need to pick up business, and perhaps the travel insurance is a good example where that's been significantly hit. How do they rebound back from that and then actually start to yield as much business volume back as they can.
Could you explain what CGI does within the eco world of insurance?
Yeah, of course, Peter. So very quick synopsis would be, we, as I say, we operate globally. We are we're an end-to-end, we provide services, end-to-end IT and business services to our clients. We operate across both government, federal and industries. Industries will include manufacturing, retail, space and defence, financial services, to name a few. Obviously, I work in the financial services division here in the UK, but working across our global division as well, so we can put in all the experiences and capabilities that we have globally. So yes, and we, I suppose, if we're, as a systems integrator, we're particularly known for delivering large-scale, complex, cannot-fail platforms. Here in the UK, that would include things like the Police National Database, open banking in the banking world, working with the CMA 9 banks and the fintech community, smart meter rollouts in the energy world. So we're the data exchange hub for that, and the communications console for the smart meters. So those national projects, people tend to come us to deliver things that, as I say, cannot fail. Coupled with the cyber security element as well, which is quite another interesting topic. Sorry, Peter.
Yeah. No, I was just going to say, I mean, it sounds as though the DNA of the business is well positioned to be able to benefit from everyone becoming more efficient and more online and more tech as you come out of it.
Definitely, and you know, we will provide the sort of, I suppose you could say, people come to us for the security of knowing that things can be delivered and run in a very durable and robust manner. We do work with different ecosystems, so fintech and insurtech ecosystems, because we recognise, you know, we don't know everything, and we want to make sure that we stay as innovative as possible. So we work with very innovative partners who are always looking to challenge the norm. Again, especially at this time, that's very relevant. So looking at new propositions, be that something like usage-based insurance, which I think we're probably going to see more of going forward. And these smaller entities and startups often come up with some very inspirational and innovative propositions, but perhaps need help to get the scale and get the right partnerships in place. And that's another role that we perform here at CGI.
So tell me about an innovative proposition that you've seen. You thought, wow, that's really interesting. That comes out of this sector where someone's being smart, like self-insurance, but it must be things that you see that other people don't. So
yeah, so perhaps the first one I'd say is the perhaps usage-based insurance, where you've got especially in sort of urban areas where purchasing a car, taxing a car, parking it on the street is perhaps for the young sort of urban demographic is not as popular as it once was. You're seeing a tendency, a behaviour to much rather go and hire a vehicle as and when they want, rather than having it sitting on a driveway, for example, for 95% of the time and having to pay all that cost. And I think with the economic uncertainty that we've inevitably got for the next 12 to 18 months at least, due to the COVID crisis, is I think people are going to be much more cost conscious, and they are going to be questioning, do they need to have, you know, the expenses that they currently have. And I think that will give rise to propositions such as usage-based insurance, where they say, look, I want to pro-rata my costs. I don't want to be paying for it all the time. As and when I need it, you know, I will come to you and I will get what I need. You could say the same for travel insurance and a lot of other sort of coverages as well. So I think what the insurance world is going to have to do, and going to that reinvention side, is, you know, what is that consumer behaviour and how is it changing, and how do they adapt to that new consumer behaviour? I know there will inevitably be challenges, arguably because of perhaps the IT estate that they have. It is new, so it's a challenge in itself to be able to make sure that it not only works, but you can make a profit from it as well. I mean, that's why people are in business. So there's certainly challenges. Parametric insurance is a good example that I'm seeing more. Parametric insurance, essentially automating claims, and you can cover a specific part of the risk, a parameter of the risk. So, for instance, if you can have coverage for late trains or late planes. If it's over a 2-hour period, you would automatically get paid for that risk, because it's an event that's happened. I saw one in the London market recently where they looked at cargo spoilage, so where perishables, food, is being transported, and if it's the index is over a certain temperature, and therefore the food spoils, again there have been automatic payments made for claims. So, and that's a very recent one that I read about. So I'm seeing different ways that people are using, if you like, technology, emerging technology, to solve real problems, to make the industry think differently, and yes, to adapt to the changing consumer behaviours that we're seeing come through.
Oh, thank you, Paul. I'm just reaching out to everyone who's listening. Both of you who are listening. You can stick some questions in the Q&A button at the bottom, and we'll try and include you when we get towards the end. James, so I'm just thinking, the insurance industry has been pretty hit this year on a B2C level with huge floods and traumas, and then on a B2B level with pandemic, with business insurance and lots of wiggle room about people saying, oh no, we don't pay clause 52, travel insurance, the industry trying to wiggle out of people's being abandoned in different countries. How do you think the industry is facing up, and what do you think its reputation will be as we come out of this?
I think it's probably less about an industry reputation. I think, the industry is made up of lots of players. You've got some really big insurance firms, you've got lots of small startups and very sort of niche specialist insurers. So I think a lot of it will come down to individual brand reputation, and I think how organisations and how brands operate and respond to COVID in the short term will actually echo for decades to come, both internally and externally, actually. How people are treating their staff in the current climate, how they're utilising things like furlough or not. But in essence, those who are trying to wiggle out for some sort of short-term gains, I think will probably come unstuck in the mid to long term.
And what happens to an insurance business when it goes belly up? Because there's a book of insurance. What happens to that book?
That's probably something more for someone like Paul, who's a bit of a long-standing insurance expert on that. But I think in essence that book can get purchased or sold or pushed onto other brands. But it's not a position anyone would want to be in. I'm sure all companies are doing all they can at the moment to balance everything within their organisation and within their sort of cash flows and capital structures to prevent that.
Okay, well, moving towards your area of expertise, James, talk to us about the challenges of marketing to insurance customers when you can only have a really relationship with them maybe once a year to get them to repay, or don't have a dollar because they haven't ticked their box, or that the restrictions of getting them. It must be really, really challenging.
I think it's becoming it's certainly becoming a lot harder. I think the key thing over the last 10 years I've certainly seen is customers are a lot more knowledgeable about insurance now, and their expectations are considerably higher. Gone are the days of people just sort of whistling through registration forms and chucking a few quid at it now. They are out there. There's a whole host of information on the internet in terms of people discussing certain policies, certain brands, what you get included, what you don't get included. So all that's very much sort of close to hand. And I think what we were already starting to see a bit of a shift with going into this year was, I think people are sort of growing quite tired of paying for insurances that they're simply not using. So Paul was just mentioning there that kind of what I call precision insurances. Yeah, how do you turn things on when you want them? How do you not turn them? How do you turn them off when you don't? And I think that is going to really start to drive the propositional development of insurance firms. You know, if that behaviour does start to grow and that trend does start to mainstream, you do in essence then get sort of two routes from that. One route is to hyper-position an insurance firm around those kind of precision products. I just got a new drone last week. I'm using a fantastic app called Flock. So every time I fly, I can turn my insurance on. So every time I land, I turn it off. But I'm not paying a year-long premium. I may not pick my drone up for the next 3 months if I'm busy, etc., etc. But I think the other thing you've then got to really defend against is self-insurance. You know, certainly the millennials, certainly those people living in those urban areas, as Paul was discussing, they're really starting to question, hold on a minute, I'm seeing a lot of direct debits going out every month. What am I getting for that? And you know, you're seeing a lot of stories of people potentially even sort of living together, housemates, all putting, you know, 20, 30 pounds into a form of joint account. And then at the end of the year deciding, you know, has anything broken? Have we had to spend out for a one-off repair? Or actually, can we just take that money, you know, back into our wallet? So, yeah, that's the sort of the delicate balance I think a lot of insurance firms have to look at. It's, you know, how do you provide, you know, value for money? How do you make sure that your products are relevant and are being used? And how do you keep showing to consumers that there is a sort of a tangible benefit of you having that direct debit leaving your account each and every month? And that's quite interesting, as I think you'll see insurance firms move a lot more from sort of products to services. I think prevention is obviously a lot better than cure. And in most markets, you're seeing the rise of kind of connected appliances, connected cars, connected boilers, connected whatever it may be, allowing us to really start looking at a service proposition around those products to say, hold on a minute, you're a customer of ours. We don't want you to get to a point where you need to call an insurance policy out on us. We can come and proactively fix something, repair something, service something. And actually that sort of starts to change quite dramatically the relationship you then have with that organisation. Because you're right, you know, the contact frequency of an insurance company is very low. And actually you want it to be very low because you don't want to speak to your customers every week about problems they're having. So, you know, I think as we've seen probably in the last 2 years the decline of the, I guess, the programmatic era for digital marketing, as we've sort of shifted into this sort of privacy first era and the authenticated web. The authenticated web is great if you can get people in a logged in state, but if you haven't heard of them or from them for 3 years and you haven't engaged with them, you haven't updated all your cookie policies, etc., 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 that's actually quite tricky for insurance firms. So you do have to find ways of how you can engage with people.
I'm particularly struck with the way that Vitality links up with Apple as a brand. And, you know, in terms of changing the whole perception of health insurance to become healthy as actually a sports health advisor, and therefore the premiums come down the more that you're giving your data about how you're doing. Do you see more brands and insurance companies coming together to build joint offers?
Absolutely. I think that's one of the sort of the standout partnerships we've seen in the last few years, and that really does show how you can just go from this kind of quite cold, quite unemotive insurance brand to suddenly actually becoming a utility in people's lives. And you know, you would really think twice if you were using, you know, that sort of proposition day in, day out, week in, week out. You know, there's justification on that direct debit going, actually that's providing some value back to me, and it's front of mind, and I'm knowing exactly what I'm getting for that. And I think what you're starting to see is the margins that are available to be made via aggregator websites and the aggregators as a sort of an industry is becoming really tough. I think that's becoming really thin in terms of the margins you can make back from that. So I do think a lot of insurers are now looking at partnerships and affinities, and how can you go and partner with somebody, look at what their core market is, look at the peripheral services that you can start to provide and bolt on to those audiences, and actually work with a brand to start driving more direct acquisition. I think, you know, you can see that in so many spaces, you know, whether that's insurance bolt-ons for the 5.5 million Mondo customers that are out there. Those sorts of things, that's probably a much more effective and interesting route to market at the moment for major insurance brands.
Yeah, interesting. Thanks. That actually is nice on to Jess. Jess, I mean, it's a long shot, but within TIPi Group, have you seen opportunities to bring businesses together to form partnerships with people with similar objectives within the digital space?
Yeah, absolutely. I think now more than ever, I think the partnerships are
the answer probably no. No, we haven't.
No, I think yes, we have across multiple sectors, not just insurance. I think one of the things we're seeing is there has been so much uncertainty, and customers really want to feel that there's a genuine value and genuine information being shared with them by brands. And I think if they can partner in a way that's successful and feels genuine and there's a real value add, then that's obviously great. Obviously in the life insurance sector in particular, we see a lot of incentive driven advertising already, but there's a lot of partnerships in that sector already. But yes, we are seeing more.
Any particular example you might like to tell us?
Yes, so one of our clients, Revity, they have an incentive with Amazon, for example.
Yeah.
So they have a voucher that they give as part of their policy. I know there's a number of life insurance providers do that too.
Yeah. So what are you seeing overall from TIPi clients, given that you sort of have an umbrella view, an aerial view over what's going on, particularly within the performance marketing space?
Well, I think from our perspective, right at the beginning of the pandemic, we were having a lot of conversations with clients about what their kind of digital ecosystem looks like and how people, consumers in particular, obviously were engaging with their content, their websites, their apps, etc. We have seen from Google Trend information just how much more information people need, particularly when there's been policy changes and legislation changes around all parts of a person's life in terms of how they can book travel insurance, when they should travel, life insurance policies, stuff like that. I think one of the most interesting conversations we had, particularly at the beginning of the pandemic, which is to Paul's point earlier, is very pertinent now, but will be pertinent in the future, is helping our clients adopt tech that means they can increase ways they can communicate with their customers, but also to improve their ways of working for them as a business. I think a good example of that would be the kind of initiative that we were talking to many clients about improving their customer services through their call centres. So at the beginning of the pandemic, a lot of insurance brands we were talking to were seeing a lot of increased complexity, perhaps in the requests that were coming through to them. Obviously, a lot of travel insurance providers had lots of people claiming more complex questions when it comes to travel insurance. There have been an increase in the severity of the claims that are happening for car insurance. We've partnered with our voice experience agency Rabbit & Pork and LV, which has been mentioned a couple of times already, to build a kind of conversational engine that essentially sits between the customer services areas that someone can talk to LV around different questions, and then obviously the consumer to essentially alleviate pressures on the call centre by answering questions through voice on information about policy, stuff that's surfaced from information that the client already has in terms of their own FAQs and information they have on the website. But I think it's people at this time don't want to be going through hundreds of pages of policy. What they want is for a brand to be showing them and guiding them on how to get the right information.
Interesting. Has lockdown accelerated interest in voice for Rabbit & Pork?
Yes, absolutely. Yeah. I mean, as I said at the beginning, I think this kind of technology was pertinent before and really important for brands to be adopting to kind of help, add another tool to their wheelhouse in terms of what their digital ecosystem actually looks like and the way that customers can talk to them, physically talk to them. But yes, it's been a huge opportunity to have some really interesting conversations with some really great brands around how they can use different types of chatbots, for example, how conversational design fits within their brands and their tone of voice, and how it kind of offer a different type of service to a client. And obviously from a promotional perspective, you can then promote that functionality to the brand's customers, so it's kind of you increase the usage of that piece of technology.
Thank you, Jess. Paul, I'm going to come back to you because I know what it's like when you go first on these panels and then you listen to all the others and you go, bugger, I knew I should have talked about that. So just coming back to give you a chance to bounce off what James and Jess have been saying.
Yeah, no, I largely agree with everything. I mean, just picking up on the what Jess was saying. Firstly, on the voice comms, I think that's. I think again, when you're looking at what consumer behaviour and how it's changing, and one of the opportunities for change, that's certainly an area. I think if you're looking at from a customer service point of view, and I think I gave the example actually where in the initial part of this crisis, call centres, contact centres were somewhat overwhelmed. And one of the things that we felt that it wouldn't have resolved all the problems, but having supplementary channels such as voice, where you could effectively triage and help triage sort of inquiries to say, look, you might not need to speak to a call agent. If you and voice is so pervasive as well now. People are so used to it, and I've got them. Alexa's probably going to switch on any minute. It's just that's another subject.
Shut up.
But people are so used to using them. So it is, look, if you do have a general inquiry, if you want to know whether you're protected for certain conditions, certain events, pandemics, etc., and what are the implications of that, there should have it's a really fairly easy knowledge base to build, and if you can then have the execution in voice, then that's so much easier and natural to some people to manage. So I think what the guys are doing at Rabbit and Pork, very well positioned for what's going to happen next. I really believe that, and then I know there's obviously marketing, which Jess would be able to explain far more eloquently than I could around the SEM opportunities and positioning your brand and sort of that side of things as well. But just really focusing from a customer service point of view, I think one of the learnings that everyone, but the insurance sector included, especially direct brands and brokers, is there another way of managing your customer, a better way? It doesn't have to be a replacement. It is that very much omni-channel view, but just so your customers have a choice, depending on the time of day, their circumstances, they can opt. People may still revert to the phone, and that's fine. That option is there. But if you want a quick inquiry, then use voice. You can use chat. You can use digital channels, be that social or e-commerce. So, and perhaps that is the one of the things that people should be looking at themselves at and saying, well, we felt we had a digital strategy. We felt we'd done a lot, but actually there's still gaps that have been left. And again, going back to the reinvention and the response, how do you respond to these things? How do you improve your services going forward? And to me, voice does stand out as a channel that's really been underutilized to date. It is still in its nascent days, arguably, but it's certainly going forward something that people should be focused on. Definitely.
Yeah, it's really, really exciting. I'm here learning French with Duolingo, which is a whole voice interactive thing, and it's an absolute joy most of the time. James, you are currently brand agnostic. So looking at the market from a slightly removed place, which do you think are going to be the powerhouse brands that are going to be coming out? So in a year's time, would have really got themselves, building on a strong strategic base at the moment in our new digital environment that will be the sexy flyers of the future?
I think obviously you've got the sort of the bigger players down one end of the market, and then some of the smaller players, and in fact, sort of insurtech firms down the other end. I think to start with the sort of the lower end and the smaller end, I think there's lots of really strong niche brands out there. I think it's been a lot harder for smaller players to get access to government help and government funding. I know many now are, but I should hope that they are able to sort of survive and push in. If you're in a niche market, I think a lot of it will come down into what niche you're in and how badly affected is it in terms of COVID, or actually it may be an area which is going to see an upturn in particular usage. I think the market was probably due for a lot of consolidation this year anyway. The whole insurtech and fintech industries have been running for many years now, and there's a lot of people who've got to that sort of scale where they're 30, 40, 50 people strong. At what point do they decide to either get snapped up by a bigger brand and just become part of something else, or start consolidating into 2 or 3 brands coming together as a bit more of a larger organization? So, I really hope, because, as sort of Paul was touching on earlier, there's some really strong ideas out there, some really strong functionality, technology, etc., that can really add to broader experiences. And I hope there's enough support out there for those guys to weather this storm.
I was interested by an earlier conversation we had about some people starting to be innovative themselves and use ISAs as an insurance facility. Tell us a bit about that and what you think, where you think that might go.
Well, I think that sort of plays to the sort of self-insurance trends that we're seeing. I think as we move from an ownership economy to a sort of more of a rental gig economy, whatever you sort of call it, people are sort of saying, hold on a minute, what am I paying for these insurances is for? And actually, do I want to own a boiler, or do I just want my house warm? And would I pay somebody, X amount a month just to keep my house warm? And if the boiler ever goes, it's their problem, and it's for them to come in to sort. But I think where you're seeing sort of, self-insurance move to is people are cottoning on to the fact that actually I can save 30, 40 pounds a month into a specific account. And I think, if you look at the rise of some of these startup banks, which is now starting to mainstream, like say Monzo, it's very easy to ring fence cash to say, actually, I'm going to save for a winter holiday. I'm going to save for a bank holiday. I'm going to save for all these different levels of things. Why wouldn't one of those buckets be, I'm going to save for anything that breaks in my life? And actually, it wouldn't be too hard to imagine, one of those banks teaming up with, whoever it could be, Checkatrade or HomeServe or someone like that, to say, look, okay, if anything does break, come straight here because we've got preferential rates for you to get a one-off repair. So, I think this is where insurance firms will have to really focus in on that value and creating that tangible relationship with their customers to say, actually, I am getting a real strong utility, something useful in my life, something tangible that I think is valuable, and I'm still prepared to pay a monthly sort of fee on.
Mm.
James, I was just going to interject there. I think that's a really good point. And looking at an adjacent industry such as retail banking and what's happened with open banking is interesting. And I question whether recent events will accelerate open insurance, where in 2018 the regulator stepped in and sort of, that's when they implemented. So earlier than that, the regulator stepped in and said, look, the consumer should own their own data, and that gave rise to open insurance. As James has said, you now have got the Monzos and the Revoluts and the challenger banks coming through. From a consumer point of view, that's good, because that gives more competition and more choice. So that's always a good thing. And you wonder, whether open insurance is I think it's probably inevitable, but I now wonder whether that will actually be accelerated further still.
And I think, Paul, the key thing here is the more so the discretionary insurances in the world. You're legally obliged to obviously have things like car insurance, and therefore you will have it. It'll be interesting to watch and monitor the consumer behaviours in terms of how they shift if and as we walk into this forthcoming recession. Because actually things like 2008 showed us discretionary insurances actually held their own pretty strongly. Because I think, people can fear, actually, I need to leave these insurances live and active because I can't afford a repair should anything go wrong. So actually, economic downturns can be really good for discretionary spends and discretionary insurances from that perspective. But, I wonder this time around if people will be a lot more aggressive in terms of how they cut their own spending back as we try and get through the next 18 months to 2 years.
I think, I agree, James. I think that's, again, that's probably inevitable because of the uncertainty economic outlook. They're going to look at ways to doing that. But I think, and I think you've mentioned it before, James, earlier, was you're going to be looking at more guided journeys and advice. I think consumers would be saying, it is a confusing picture out there. I have a number of concerns. Yes, and we always say in insurance, certainly commoditized insurance, price is king. and it still will be. But I think having guided journeys where it is explained the type of coverage, the type of new propositions maybe that may be more suitable to you as a consumer because of your way of life and your circumstances. And I think that's where direct brands, intermediaries, brokers, have to play an important role. They have to be able to give that. It's not just about price. You have to be conscious of this. I touched on it earlier, but things like we've seen a big step up in cybercrime and the growing threats. And that an easy example is everyone's using their sort of video conferencing and all the various. We're on Zoom today. You've got all these different tools that are out there. And it's just making sure that you defend. There's no vulnerabilities you're leaving behind, and the same for the way that people operate in life, be that businesses or personal. You need to know what new vulnerabilities exist, new products and propositions that may be coming to market that better suit your lifestyle. Be that usage-based insurance instead of paying a normal annual term policy, for example. So. And I think, as I say, that's where direct brands and intermediaries, brokers could and should play a greater role to really make sure they're giving that information and that guided journey to the right product and the right price.
Well, interesting. Thank you, chaps. I think that's probably our time is up. I think is there anything else? Anything to say, Jess? Is there anything else you'd like to wrap up with?
No, I don't think so. I think it's like I said at the beginning, it's a very interesting time for us. I think as a business, I guess the benefit that we have is that we have a lot of specialism in our business. So we have been able to move quite quickly, and I think which has been particularly helpful, particularly for the financial services sector, with how much, as I said before, how much it's been changing. And yeah, like I very much agree with Paul. I think the voice in particular is a really exciting part that I'm hoping to see a lot more conversations around, pun intended.
Super. Look, thanks very much. Thanks, Paul. Thanks, James. Very nice to get to know you. And be good, be safe, and make sure that in 6 months' time we're all having a fantastic time. Good luck to James. And if anyone's been listening, I would definitely give him a job tomorrow. Top man.
Thanks, Peter.
Okay. Thank you very much.